Hi, this is Kerry Artak with Artak Advisory, and this is the weekly After the Bell video supplement for the Monday, June 7th afternoon show, in which I cover three markets really: corn. And in corn, I'm going to provide both July, old crop, and December new crop analysis, December cotton, and August live cattle. Before I jump into the charts, just really want to encourage you to take me up on that free trial offer that I have on my website. You've got the free trial link, the form, the button is everywhere. You really can't miss it. I do offer a new free trial every 6 months, so if you've had one before and it hasn't been in 6 months, I'd be happy to provide another 2 weeks. Obviously, my end game is to have you become a regular monthly subscriber. There are no long-term commitments on that. You can go month to month if you like. And I cover a broad range of the most actively traded agricultural commodity futures markets in North America. And so, you should be able to find something that I provide that suits your needs. I cover, a broad range of time horizons from day trading to short term swing trading and increasingly longer term analysis for hedgers and producers. And so please take me up on that free trial. Just first name, last name, email address, of course, and a phone number. I do call during the free trial and can consult and talk to you about your trading needs, your hedging needs, and then we can go from there. And that's really all I'm going to say about that. Let's jump into July corn. What I like to do is start with the big picture, kind of longer term reminders, and then work our way in. If you take a look at this chart, I did have a meaningful buy signal last December, in which my initial and really ultimate target at that time was in the 640s. This long-term descending two-thirds speed line lined up with a 5/8 Fibonacci pullback from the 2012 low against the 2012 high against the 2012 low. That's at 642 half. This long-term speed line comes at 642 even. We really didn't even hesitate there much. We pushed and settled above this area in late April, then setting off another 3 to 5 month buy signal that remains in effect up to 834 and a quarter. And this is lead contract. So this is a weekly continuation chart that rolls with volume. Right now, of course, that's July. And in the coming weeks, when September inherits, or when September volume exceeds July and we roll to September, September will inherit this chart, and then December will as well. As we get into later August, early September, the December contract will inherit these levels, which I'll get to in a moment. The December contract, which is considerably lower, almost a full dollar lower right now in value than the July contract. But let's just talk July right now, or the lead contract, which is July. We've got solid support that begins at 642 even. Now, we broke below that a couple of weeks ago. We never settled below it on a weekly basis. And I also have a rising 1/3 speed line that is projected off the 2020 low. I'm not going to show how to create speed lines. It's relatively complicated, or I should say time consuming. It's not really complicated, but they are trend defining line studies I have used for years, since my days at the Chicago Board of Trade in the late 80s. This rising speed line did hold nicely a few weeks ago, and it comes in at 619 half this week. In fact, I'll show it on this chart. This is the same chart but blown up. 619 half, rising on a week by week basis. My subscribers are apprised of this level on a daily basis even. And this is our base of support, above which 834 and a quarter remains a 3 to 5 month target. We do have resistance levels on the way up I'm not going to get into that can contain weekly highs, but right now 834 and a quarter is in reach by the end of summer, where the broader corn futures market can top out for the year itself, possibly well into next. Now, downside, if July corn this week closes Friday, that is the week itself, below 619 half, then, the party is over, if you will. I then see a good annual high, and the market then likely to fall back into this 464 and 3/4 area over the following 3 to 5 months. And this is what I'm terming our new floor of long-term support in the broader corn futures markets. This is an area, 464 and 3/4, if tested, say, between now and the end of the year, can absorb selling through next year. And the same is true with 834 and 1/4. These are very long-term levels. We could trade inside this zone for the next several years, perhaps. And then inside of that, we have a respectable pivot region that begins at 642 even, ends at 619.5, narrowing on a weekly basis, above which, and we are, 834 and 1/4 remains a 3 to 5 month target. Let's move on to December corn, new crop. This is just a simple weekly chart of the DS21 contract. And, this upper 550s is a meaningful pivot point. It is the low of the high at 558 and 3/4, and it is the high of the recent low at 557 and 3/4. So this area can actually absorb selling into, if not through July, and above which I do think that the 669 and 3/4 formation is likely. I'm giving this between now and the end of July. It might actually be sooner. It could be 2 to 3 weeks, but it may take 5 to 8 weeks or so, in which case the 669 and 3/4 formation can absorb buying on a monthly basis, possibly through summer trade. From there, this contract can fall back. And if we close above 669 and 3/4 at the end of any week, then the next meaningful resistance would be this 834 and 1/4, or wherever the December contract is in relation to the July or perhaps September contract at that point, which both of those contracts, this is now July, September will inherit this in about, a month, month and a half. I'm not going to get too deep into that as well, but just know that, December corn, constructive through July, above the upper 550s, anticipating the upper 660s, rising weekly over the next month or two. Now, downside, where does December corn turn bearish? At this point in time, I'm relying once again on that weekly chart, that 619.5 July level, which I can show you again right here. This is our downward pivot point for the lead contract, because this is the weekly continuation chart. That is nothing more than the stringing together of preceding contracts. 619.5 is our downward pivot point into later year if the July contract, for instance, closes below it. And so all I'm doing is just some simple math. Right now, the DS21 contract equivalent to 619.5 July is 528 and 1/4. It's just a pure spread analysis. This number, 528 and 1/4, will fluctuate with the spread. So it can go higher or it can go lower depending on what DS does in relation to July. But right now, this 619 July is a solid stationary level that is rising on a weekly basis as I show it. So bearish DS21 contract with a weekly settlement below 528 and 1/4. I'm not going to give the targets right now because I don't see that happening this week, or for that matter, between now and the end of July. Let's move on to live cattle. This is the August contract. The August contract inherited this chart a couple of weeks ago when it exceeded June volume. This is a volume-based rollover, once again, weekly continuation chart, the stringing together of previous contracts, which is about the only way you can really analyze long-term studies in the futures markets is the continuation chart. Anyway, 119.82 is our ceiling. It's really a convergence of a descending channel top and a descending 2/3 speed line that's been holding the highs now for the last 3 or 4 weeks. Below 119.82, the lead contract, presently August, which is the lead contract now for the next couple of months, remains heavy into later year. The broader market, the broader live cattle complex remains heavy into later year below 119.82. This 99.30 rising speed line in reach over the next 3 to 5 months. Now, we do have little stair-step sell signals, secondary sell signals on the way down. I'm not going to get into that. I'm giving you big picture here. 119.82, our ceiling, below which 99.30 in reach between now and, say, autumn trade. By that point, it'll be the October contract and then the December contract that'll inherit these price points. Now, inversely, you might say that closing above 119.82 is bullish, and it is on one count. but I do think that we need to watch the August contract analysis itself. What do I mean by that? This is the August chart only. This is not a weekly continuation chart. And so August data, August 21 weekly chart data is showing similar resistance, but not exactly. It's a little higher, another 2.5 points higher or so at 122.5. So the way I'm framing my live cattle analysis right now, lead contract August, is bearish below 119.82 into later year, and we turn bullish above 122.50. So that 119.82 to 122.50 area can absorb buying through summer, and below which the upper 90s are anticipated over the next 3 to 5 months. Inversely, closing the week Friday above 122.50 August contract is a buy signal that should play out through the balance of August contract life. The following 2 to 3 weeks, 3 to 5 weeks, expected to yield 127.90. But we could, and I don't know by August expiration, the October contract will inherit this price. So, if August closes above 122.50, which would obviously also be above this 119.82 area, then 136.10 becomes our next 3 to 5 month target. So closing above 122.50 August contract at the end of this week would set off a 3 to 5 month buy signal into the mid 130s, 136.10 long-term channel top that spans 5 or 6 years, able to absorb buying through the rest of the year, quite possibly through next. From here, we can fall back for months to follow. I think that covers the live cattle. And finally, let's jump into cotton. Cotton needs to be mentioned. This is a long-term descending 1/3 speed line that is projected off the March 11 high and using also the April 20 low. This is trend defining. It existed after this low was made, and it has been holding beautifully. This is a textbook example of how speedline analysis works. It also happens to coincide with this channel top, which also held, by the way. So this area comes together in what I call the low 90s, 90.73 to 91.83. And by the way, this is the December 21 contract. That is the lead contract right now in cotton. This is our resistance area. I am anticipating this once again over the next 2 to 3 weeks. It can contain annual buying pressures, and below which I do think over the next 3 to 5 months, this market is likely to fall back into the upper 60s, low 70s. This present convergence of a rising 2/3 speed line and descending channel bottom remains a 3 to 5 month target below this low 90s ceiling. Now, one thing I'm going to show you with the DEES contract itself, this is not a weekly continuation chart, this is just DEES 21 data, is that I also have resistance in the DEES chart with a simple rising channel bottom off this March low this week at 91.91. So the low 90s, big area for cotton. And if we close above it, if we close above 91.83 at the end of this week or any coming week, we have a significant long-term buy signal in cotton. I've got 113.81, which is roughly, sorry about that, I'm going to remove that line, 113.81, which is roughly, right there. That is a 3/8 Fibonacci retracement. That becomes our next 3 to 5 month target. But quite honestly, closing above 91.83 at the end of any week is a significant long-term buy signal. I would expect a full channel extension up to 135.23, and actually speedline analysis dictates that if you close above a descending 1/3 speed line, your real target is the descending 2/3 speed line, which is presently at 155.12. So this could be an interesting second half of the year. If we close the coming weeks above 91.83, this market could take off significantly and push into the mid 130s to mid 150s. Within, we could see high volatility then, perhaps. This could take a year and a half. This could take 6 months. Really difficult to gauge, but it does become an objective nonetheless. I think that that's all that needs to be said for this week's AgriTalk video supplement.
So do yourself a favor. Fill out the free trial form on this website. Take that 2-week test drive. You've nothing to lose and much to gain.